Hey guys, how are we all doing? Thought it's been 3 weeks, so do another little stream, just see how you guys are getting on. See if you want to chat about any bits, any investing stuff, any crypto, whatever you fancy. Been looking at a fair few different stocks, bought a fair amount this week. Sort of made the Saturday update as usual, and then Bitcoin sort of went a bit crazy over the weekend. So I made a sale of about £11,000 and put all of that into the market yesterday, pretty much. So been buying lots of different stocks, some new stuff. Can sort of come back to that. I sort of got my big chart that I had before. So just been kind of reminding myself how much of this I have bought now, and the ones that I've sort of been leaving off. Well, for now at least. So certainly interesting having to sort of, not having to, but wanting to sort of substitute some of the higher PE stocks with sort of others in a little bit more of a value range, just maybe until they come down a little bit more. So yeah, drop a comment in the chat, and yeah, we'll see what you guys have got to say. So some of the ones on here I've still sort of left off. Still sort of Pepsi and Coca-Cola, McDonald's, all just sort of the general dividend stocks that people sort of tend to gravitate towards. Not really too keen on holding them at the moment. They just seem sort of, they're not growing as much as a lot of companies out there, but they're sort of commanding the high PE ratios that you would expect from a growth company, really. So similar with Mondelez, they're the sort of Cadbury's owner and sort of snack foods type thing. Not horrendous, but just a little bit high PE. Didn't really see why. Disney and Hasbro. I'm sort of watching Hasbro as maybe a sort of cheap version of Disney, but still seems a little bit high. Disney, I just really don't understand. I think people are putting far too much stock into Disney Plus. It's sort of a tenth of their revenue, maybe sort of an eighth of their revenue, and it's only projected to grow to sort of a quarter of their revenue in the sort of next couple of years. So I think giving it a crazy high sort of tech stock valuation just seems a little bit much. Procter and Gamble and Unilever haven't really bought any of yet. Again, just seem a little bit high. The tech side, I do actually own all of these now, so pretty happy with that. Some are bigger positions than others. And then the defence side, I've got Lockheed and Raytheon, but the sort of the planes side, if you like, I haven't bought into any of them yet. Just again, considering where we are, they seem to be pretty high. The only one out of the three that is doing sort of any good really is Airbus, and they're really being marked up for it. So don't really want to be buying any of these three at the moment. I would like to hold them long term because they've sort of got a sort of semi-monopoly on the market, sort of a duopoly, as you'd call it, with Boeing and Airbus, and then sort of Rolls-Royce. A lot of the companies don't really have a lot of choice but to go with Rolls-Royce for some of their parts. So again, we'd like to hold them long term, but not while they're in the situation they're in. So sort of substituting these companies with other picks at the moment. So possibly a little bit sort of hypocritical saying that these were my long-term picks, but yeah, hopefully over the decade they will eventually be my long-term picks, most of them. So we'll see. Hello guys. What's your day job, Harry? I'll say I'm in construction. So not particularly high, sort of high-paying job. Yeah, I'm not even on the higher tax bracket. I'm on the basic tax bracket. So shows certainly it can be done. V Patel, thoughts on EV stocks? Yes. Well, VW, I think, has sort of proven that the traditional companies probably aren't going to just die away. Yeah, as people are thinking they are. I did want to sort of point out, in case, so I do sort of mention Volkswagen a lot, that it isn't just, for anyone sort of unaware, it isn't just Volkswagen, it's VW Group. So obviously they own sort of all of this lot, in case anybody was unaware. So you've got the sort of commercial vehicle side in Scania and MAN and their own stuff. You've got Ducati bikes, interesting one. And then sort of the supercar side with Bugatti, Lambo and Porsche. A little bit of the posh side with Bentley, and then your sort of everyday cars sort of along the top there. So I think it's quite a nice group. And my sort of thinking behind this purchase really was sort of between all of this lot, with the sort of pooled knowledge potentially, and the sort of work that some of them have already done towards electric vehicles, that they would sort of come up with decent sort of range and decent technology between them. And sort of the valuation was a hell of a lot lower than sort of people like Tesla, and I mean they're valued less than NIO at some point. Sort of the total of all of these put together was less than NIO. So I thought for the profit that they already make, NIO sort of doesn't even make a profit. They would be able to put their pooled resources and money into sort of EV development, and that seems to be paying off at the moment. Obviously NIO shot up earlier last year, but has been sort of tanking pretty hard with the Tesla sell-off. That sort of seem to, unless they've got very specific news to them, it sort of tends to pretty much follow Tesla, and they're sort of taking a hit now, where some of the traditional companies, even Ford, GM, and that sort of thing, are all sort of rising quite nicely. So, and Porsche, as people sort of have seen Porsche in my portfolio. Porsche stock is basically just a holding company that own 30% of VW Group. So they don't own, or they own 30% of this lot basically, which includes all of Porsche. So yeah, Porsche actually owns 30% of Porsche. It's a little bit strange, but yeah, that's just the way the sort of holding shell type company works. Viral, you got a haircut. Very nice, very nice. Getting back to normal somewhat. Hello Ethan, hello Seth. ISA plan for 21 to 22. ISA plan currently is probably I'm hoping to time it sort of somewhat with a cryptocurrency sale. Sort of hoping that we may have to wait until sort of part way into April. But if we get a sort of a decent size move, Sold 11,000 this week. I'm sort of maybe hoping to sell maybe around 20,000 and just sort of put the whole lot of that into trading 212 ISA. Not looking to move at the moment, and that would probably go into pretty much all of the REITs except Store Capital. I'm not actually in that one yet, and haven't sort of seen a reason to go into that just yet. Seems sort of similar to Realty Income, but I just prefer Realty Income a little. But certainly all the rest pretty happy with. So I don't want to, as I said, I don't really want to hold those in the invest account for sort of complicated tax reasons. It's just easier to hold them in the ISA. So be going pretty big into all of those, possibly sort of maybe 15,000 if I can max the ISA sort of early on, probably about 15,000 of it split between all of these. Maybe a little bit more in American Tower and Digital Realty, because they're sort of bigger companies and global companies, where sort of people like Target Healthcare and Impact are just sort of small UK only. So I'd maybe sort of do maybe 1,000 between 1,000 for each of these, and sort of probably more 2,000 on American Tower and Digital Realty and Stag and that sort of thing. And then I haven't decided quite how much yet, but the ARC Medical pie, if the sort of tech stocks and the growth stocks are still crashing or having a little correction, it's not really a crash, that would probably, a fair amount would go into the ARC pie. Thinking maybe 2,500, and then sort of leave 2,500 for something else, which I haven't really decided yet, but that'll be the bulk of it. I mean, that's certainly sort of at least 3/4 of where the money's going. So Ryan, am I a Norfolk boy? I'm not saying. Price target for Bitcoin this year, I'm still thinking sort of $100,000 would be sort of cautious figure. Could go above that, but I'll be sort of taking profit on the way up to 100,000 and sort of keeping a little bit on the side for if it just does go crazy. Simon, thoughts about trading 212 payments? I haven't seen, I'm not sure what you mean specifically. I haven't seen too much issue about trading 212 payments. They've introduced the fee, the FX fee. I think they're sort of doing it just because they can, basically. They're still sort of far cheaper than everyone else. Yeah, sort of free trade are 3 times what they are. I think some of the other platforms charge 1%. So yeah, 0.15%. I think they're sort of basically doing it because they think they'll still be the cheapest, and you haven't really got a great deal of choice to go elsewhere. But yeah, we'll see what they do. I'm not sure they're going to be, I mean, they've said they're going to be putting it into development, so we'll see what comes. I've been noticing dividends coming a little bit sooner, still sort of 5 to 10 days sort of past the payment date, but it's not the end of the world, I don't think. But yeah, if that's the only fee, obviously sort of it's only on foreign stocks, so if you hold a reasonable amount of UK stuff like I do, you won't notice it on theirs. Obviously you still pay stamp duty, and stamp duty's over 3 times the FX fee, so kind of puts it in perspective. Like I say, when other firms, some of the other firms charge, as I say, 1%, so that's 6 times what trading 212 are charging, and they also charge actual share dealing fees. Obviously I'm I've got sort of part of my ISA still with Hargreaves Lansdowne, and they charge £12 per trade for individual stocks, plus I think 1% FX fee and 0.45% of your total portfolio every year. So I've just had to sell £100 of my BlackRock Gold Fund at somewhat of a low point in the last couple of months. It's sort of come down, and the platform fees do, and I can't add anything to it because obviously I'm putting money in the Trading 212 ISA. So I've had to sell part of my holdings to pay for that. So kind of annoying. So Trading 212 seems to be the place I want to be at the moment. I'd happily, if they start doing the in specie transfers where you keep your investments intact, I would be transferring from Hargreaves to Trading 212. Quite happy. And VW movement, well, as I say, I mean, we sort of had a quick look at VW. You know my thoughts. That's where I want to be. That's my anti-Tesla bet, basically. Sort of held Tesla for a little bit, and yeah, I think Volkswagen is the sort of value option on the EV market. They seem to be making the biggest push, certainly, towards it. Ethan, what's your favourite stock and favourite cryptocurrency? Well, favourite cryptocurrency is Bitcoin. That's kind of easy. I do believe in the altcoins, obviously. I do hold sort of quite a bit, but you can just see where the big money's going. Yeah, you can sort of see obviously institutions getting in. Some people are putting up, you got people like Tesla putting in $1.5 billion, other sort of insurance firms, pension firms, that sort of thing. You don't hear any of them even investing a great deal in Ethereum. That's the second biggest. It's all going into Bitcoin at the moment. So I always say if you haven't got any, it's probably the first one to go with, and then maybe start going for altcoins from there. Favourite stock? I don't really sort of have one. I did kind of put actually Volkswagen as sort of one of my biggest positions. So these weren't all going to be equally weighted. Some of these were going to be sort of bigger depending on if I had lots in the sector. So I've got quite a few food stocks, food type, staple stocks and that sort of thing, where the sort of industrials, VW was sort of basically my only European one, and it's sort of one I was quite bullish on, so that would probably be a bigger holding eventually than some of the rest. So Disney was actually, sort of considering that one of my sort of consumer discretionary, sort of call it entertainment, but I don't really have a great deal in that area, so Disney was going to be one of the biggest, but just not really happy where it is at the moment. It's probably one of my favourite sort of global brands. Really like the brand and would love to hold it as a stock, but just think the return could be quite poor from where it is now. Also really like Nintendo as well, which obviously it's at a better valuation, so I'm happy to buy into it. So yeah, I think I did a sort of rough percentage, how much I want to have weighting in each of these, and Nintendo, Disney and Volkswagen were sort of pretty much up there, right at the top. Right, 300,000 is the Bitcoin target. Yeah, I've seen a lot of this. Obviously it'd be lovely, but I just think it'll maybe start to see a bit of headwind before it gets there. There's a lot of people in the world that probably don't want it to go to 300,000, and they've sort of proved that they can manipulate the gold and silver sort of precious metal markets. So I think as it rises, there'll be sort of more and more of this. I mean, you've seen it's risen up over the weekend. the institutions don't trade the weekend, and maybe it's just coincidence, but Monday morning it comes crashing back down. Whether the institutions get a bit unhappy, yeah, they can sort of potentially be shorting it on the CME exchange and that sort of thing. Some of them have obviously got big positions in it now, and I'm a little bit sort of cynical, thinking that they can start sort of manipulating and getting involved as it starts. It's above $1 trillion now, so yeah, I'm not sure about 300,000, but I'll keep some on the side for if it does go there. A Norfolk boy, yeah. Simon, thoughts about Tesla and what price would I buy? Well, I sold it. I only ever bought one share at sort of 380 or something, and sold it at 750, and it sort of ran up to 900, and I was thinking, well, fair enough, it's gone. And then it sort of come back to, under 600. I think I did consider maybe just buying back that share, but I don't know, as I start to sort of see more of the traditional boys coming on, Ford starting to sort of, get more into EVs. I kind of thought they would eventually, GM, people like that. I just think this whole idea that Tesla are 5 years ahead of everyone else just seems a little bit far-fetched to me. I think people have probably got more brand loyalty than everyone's given Tesla credit for, basically. If you've driven sort of Fords or some of the Germans all your life, everyone isn't going to go and buy a Tesla. So are you going to go from driving an Audi to suddenly buying a Neo if they expand into Europe? I sort of kind of doubt it. So yeah, I don't think I would go into Tesla again. Unless sort of something drastic happens. I think they're always going to be at an extremely high valuation with the other stuff they're getting into. Again, I'm sure somebody will say they're not just an EV company, or they're not an EV company at all, they're an energy company and all this, but they're not making money out of any of the other stuff. So I kind of think you're just really buying hope if you're getting into all that. Buying the potential of a robo-taxi company. It's just, I don't know, might seem harsh, but I think you're coming up with a theory to justify the price rather than sort of looking at what they are today and what they could grow to. They're sort of coming up with new theories of what they could turn into. Thoughts on Argo blockchain? Well, I do hold them. I've sort of got that and the Bitcoin ETP, the German one, which is now sort of frozen on close only mode or sell only mode in the ISAs, but I did get a little bit. I like Argo as the sort of crypto in an ISA type investment. I think they should sort of detached from the Bitcoin price a little bit recently, because they're getting into a lot of other avenues, sort of buying land in Texas and sort of expanding their hash power with new machines, that sort of thing. I think they've issued some shares, so that's diluting people. People get a little bit unhappy and sort of sell their shares. So it's not been keeping, it was sort of keeping pretty much pace with Bitcoin. If Bitcoin goes up 5%, Argo would go up 10%, sort of similar to gold and silver miners, really. But yes, I would think as the other stuff sort of starts to get put into place, then they probably should just track the Bitcoin price, as you say, on leverage, basically. So yeah, I like Argo. Won't hold it forever. Probably hold it until I start selling the last of my Bitcoin to try and get as much as I can within the ISA, so not sort of paying tax. So yeah, that's kind of the plan with Argo. Dale, do you use a crypto wallet? Yes, sort of multiple wallets really. A couple of software wallets. So we use Exodus and a couple of the other sort of smaller ones for coins that don't support Exodus. I did look at the hardware wallets before, but I kind of think sort of it's just another avenue to sort of potentially lose it if somebody burgles you, finds out about it, then you're still going to lose everything. So didn't really see the need for a hardware wallet just yet, so quite happy with software wallets. Brian, Tesla's price to perfection now. Yeah, exactly. I mean, it has kind of been for a little while though. They were sort of obviously priced pretty high when they weren't making a profit. Now they are making a profit. Everyone's sort of gone mad on them again. They got into the S&P 500, so people just see that as bullish and they keep bidding it up. I sound like Basil Brown from The Dig. Haven't seen it, but fair enough. Thoughts about PayPal and Square? Not too keen on the stocks themselves. Whether sort of I wouldn't really count them as a Bitcoin play. Other people have sort of been suggesting that. I don't think they're exposed enough to Bitcoin to call them a Bitcoin play. But yeah, as sort of stocks themselves, they seem fairly expensive. PayPal not so much, but Square certainly sort of potentially even more overpriced than Tesla. When you look at sort of say Square, I mean they're $243 even after a sort of fair downturn, and sort of earnings per share this year of $1.23. Obviously it's rising quite fast, but $1.88. I mean, you're sort of talking about for next year, so it's not even just the forward PE, it's the 1 year forward PE of 129, 130. I mean, yeah, Tesla aren't even that, I don't think. Have a look out of interest. Pretty sure Tesla's 1 year forward PE would be less than that now. Maybe not by a lot. So, say 677, or by an estimate of 552, the consensus sort of estimate for 2022, 122. So Square is more expensive than Tesla. So that's quite an achievement. So we got target price for Argo blockchain. I mean, I do struggle with this. I haven't really been looking into their expansion as much as maybe should have. You would kind of think if they're tracking the price of Bitcoin, if they just carry on mining what they're mining currently, just doing some very sort of rough figures, if they're £2.40 at the moment, divide by sort of $60,000 Bitcoin, and if we say I think we get to $100,000, but if we said 150,000 to give them that bullish sort of leverage on the Bitcoin, and if they sort of expand with the Texas new potential site and more cards in their existing facilities and that sort of thing, you could probably get to £6 maybe. I think if I'm selling a fair bit of my crypto at sort of $100,000, I would probably be selling out a reasonable amount of Argo if we were up at sort of £5 or £6. But that's maybe me being a little conservative. It could go higher than that. But yeah, that'd probably be a price I would be certainly taking a bit of profit on. Dale, all car manufacturers getting into EVs. Well, they kind of have to. I mean, whether you believe the sort of targets and regulations and things that governments are putting out, I think the UK are sort of saying 2040 they want to ban EV, sort of combustion engine vehicles. I think it'll happen naturally long before then, but yeah, I think probably sort of 2030, you know, if you're not selling EVs by then you're basically going to be near enough dead. But I think most of them are already transitioning pretty hard, as you say. So I think they're kind of seeing that they have to, but I've sort of always had this thought that they would transition somewhat seamlessly. Some are going to do it better than others. Some are going to be later than others, you know, since certainly some of them don't seem to care all that much at the moment. But they'll get there, and maybe they'll do worse than the ones that have gone earlier. But yeah, I've sort of said it before. I think this idea that, you know, the car market in 5 years, say, is going to be Tesla, Neo, Lucid Motors, and Xpeng, just seems a little bit ridiculous to me. What stocks am I looking to buy into this month? So that's probably a good point to mention what I've been sort of substituting my my other stocks on here with. So as I say, sort of not buying Boeing, Airbus, Rolls-Royce and Procter & Gamble and Unilever and some of the food and drink ones and that sort of thing. So instead, this week I've bought Anthem. They're a sort of US healthcare company. Fairly good growth, but fairly low PE. Seems to be quite common of sort of US healthcare companies. You've also got Cardinal Health, which I bought into this week, about £1,000 of each. Again, sort of Anthem growing a little bit more than Cardinal. And the sort of United Healthcare are basically right at the top of the sort of US healthcare side. But didn't really want to go with them, seemed a little bit pricey compared to the other two. Kind of prefer the sort of more value end. In terms of other new ones, put a little bit more into eBay, put into the Global Clean Energy, iShares Global Clean Energy. That's sort of been battered fairly hard. Still think it's a little bit high, but I was quite a bit down, so put 1,000 into that, hoping we can sort of start to average down that a little bit and it'll still be a long-term hold. Bought into Nintendo, another 1,000 into Nintendo. Fairly happy with them. This will come back a little bit, and there's news of the potential Switch Pro coming out. Process, sort of interesting one. I may have mentioned on one of the videos. They're a sort of conglomerate, European conglomerate that sort of own a load of different stuff. I think I've got a tab of them open. Yeah, been sort of looking at them. So they own sort of loads of different companies. They've got a little bit in Auto Trader. Some of them sort of stick out. They've got some fast food type stuff, Delivery Hero and iFood and that sort of thing. Another one that stood out to me was Udemy. They've got a stake in Udemy. But basically, people see it as a sort of proxy, if you like, for holding Tencent. So the reason the company is about $180 billion market cap, and they own 31%, I believe, of Tencent, which by itself is worth 250 billion. So basically the market is discounting their holding in Tencent, and then you're basically getting all of the rest of this for free. So quite like the look of Tencent. reading a little bit more into them, and yeah, Process seems sort of a cheaper way to get them. So I bought £1,000 of that, another 1,000 of Rio Tinto, 1,000 of Samsung and Sony. Thought they were quite interesting. I think they've been added not too long ago by Trading 212. I think Sony's actually on the New York Stock Exchange, so I think that's been there for a while. But quite like the look of Sony. Fairly good valuation and pretty good news probably coming with the PS5 numbers. 1,000 into the Vanek video games ETF, so I said I kind of wanted to average that down, and 1,000 into Verizon. Sort of silver, the Berkshire, Warren Buffett has bought into it a little bit, looked into it, and it does kind of, I've been sort of watching it a little, kind of seems a very cheap valuation. They seem to be going probably the biggest out of the 5G American companies. So yeah, bought in a little bit of that. So these are sort of, some of the new ones are, as I say, potentially temporary, while some of my other long-term stocks are not really in the value range. If they do come out, then I may sell some of these and go for them again. So that's kind of what I've been buying this week and what I've been looking at for the moment. Hello, Simon. So you have a lot of REITs. Was there any reason why so many, or is it just most of them pay monthly dividends? No, I'm not really that bothered about the monthly dividends. I see a lot of people sort of mention this. Kind of don't see the great appeal with it. I know, so obviously, if you're looking to, live off the dividends, then it sort of helps cash flow wise and budgeting maybe if you're getting paid monthly. But I think if you're sort of coming up to retirement, say, you could maybe just wait a few months until they start rolling in, and then just sort of, you would add up all the potential income over the year and just divide it by 12 basically. So that would be your sort of monthly salary that you're allowed to spend. So yeah, not really that bothered about sort of whether they pay quarterly or monthly or even semi-annually. I think sort of some of the UK ones, Legal and General and that sort of thing, pay twice a year. Doesn't really bother me. As I say, it'll just be a big payment during the year, and you have to split that out across the months. The reason for holding so many is just sort of exposure to the different sectors that I want. So I don't really want to hold a REIT ETF because they sort of hold residential, which I wouldn't want, commercial sort of office space and that sort of thing, which I wouldn't want. So I sort of have the Tritax ones, the sort of Europe and UK industrial side, and Stag Industrial for a bit of US. So it's sort of geographic diversification there. Impact and Target Healthcare, sort of UK care homes. So I wanted a bit of exposure to that. Quite like the sort of UK ageing population side, and yeah, kind of think the care homes sort of obviously a little bit overpriced in the UK, but if you're going to hold a REIT, then you might as well get some money out of that. Assura and Primary Healthcare is sort of your doctor's surgeries and your sort of UK walk-in facilities and that type of thing. So I think they'll always be around, pay a steady dividend. Digital Realties, data centres, so that's a decent sector to be in, so just have one of them. American Tower for your mobile phone towers around the world, nice one to have. And then Realty Income, as I say, I'm not in Store Capital at the moment, but I do keep it there on the watch list. And Realty Income is the sort of the retail side. So, as I say, I like the REITs, but if you want exposure to these sectors, you do have to sort of hold quite a few. or you hold an ETF, which is going to have some rubbish in, quite frankly. Inkmatic, hello Inkmatic. What are your thoughts on the eToro SPAC? I didn't know there was a SPAC for. There's a SPAC going after eToro. Well, not too sure about that. I think eToro don't exactly have, particularly big moat, if you like. There's a lot of competitors to eToro. Heard lots of sort of complaints of people using them. They charge quite high fees on, they sort of boast about, you can invest in crypto with them, but they charge quite high fees for that. They sort of say you can invest in foreign stocks, which you can't invest in the UK, like the ARC pies and that sort of thing. People maybe don't realise it's CFDs, that sort of thing. Not really that keen on CFDs. Obviously, they've got similar model to Trading 212 in that they probably don't make a great deal of money out of share trading, but they would really like you to get into CFDs. But Trading 212 certainly don't exactly ram it down your throat, where sort of eToro are hammering the YouTube ads. And I haven't used the platform, but supposedly people say, every 5 minutes basically is a little sort of nudge to why not get involved in CFDs. I think even when you're buying a stock, I've seen, it's sort of one click of a button to be buying a stock normally, or suddenly, buying a CFD. You just flick on the leverage, it's one click away, and all of a sudden you're buying a CFD. So, and it comes up, obviously, you can sell a stock that you don't own. People might get a bit confused about that. So, not really keen on the platform at all. So, wouldn't really want to be investing in a SPAC if they were going after them. VIRL, hello. What am I doing with my BP and Shell? I don't hold BP. I do hold Shell. Started to drop a little lately. I mean, they're not dropping a great deal, are they? If you sort of look at the long term, I thought they were doing pretty well. I mean, £14, £14.60. Come down a little bit off £15, but I think that's just partly a drop in the oil price. It got to sort of $70, I think, and started to come back a little bit. I think probably the pump to £15 on Shell was expectation of just continuous run up in the oil. So yeah, it's come down a little bit, but you sort of zoom out, it was £12.50 in sort of beginning of February, and you sort of zoom out a little bit further, it wasn't so long ago. October time, November time, it was £10. So yeah, I kind of think with we haven't even got back to getting out of lockdown, the whole world sort of getting back to normal. I think you'll start to get maybe not a huge run up in the oil price, but it could stay steady above sort of $70, and Shell and BP sort of say they're profitable at, I think, around about 50. So yeah, I'd be fairly happy with BP and Shell. They're both getting into renewables, sort of that was the idea, using the renewables money to get it, or using the oil money to get into renewables, kind of thing. Again, sort of obviously I'm in the iShares Global Clean Energy, but yeah, kind of think obviously they haven't got a great deal of money, haven't got a great deal of income, so they're trying to grow, where obviously people like BP and Shell can just pile the oil money into, buying existing, maybe existing companies, or I think Shell are going for the sort of electricity contracts using existing renewable energy. They want to sort of grow, buy assets and grow themselves rather than just outright buy a company. I think BP are sort of taking the instant, just buy a company approach. So, But yeah, I'd be fairly happy to sort of hold them longer term. I haven't seen anything to put me off Shell, so quite happy with them. Simon, still sticking with 212 for next year's ISA. Yeah, I can't, as I say, can't sort of see any reason to switch at the moment. I know people, I think some of the sort of dislike of 212 recently has probably come from people that 212 is their first platform. I think if people sort of have a look around elsewhere, you're going to start to see maybe that the grass isn't greener on the other side. As I say, I've got a Hargreaves Lansdowne ISA and an iWeb ISA. iWeb aren't exactly too bad. You pay, unless they've changed it, you pay £25 to set up the ISA, and then there's no annual platform fee, but there's a £5 trading fee to do anything. So buy a stock, sell a stock, ETFs or anything like that, pay £5 per trade. So if you're trading smaller amounts, it's just going to destroy your return. So trading 212 sort of wins there for the smaller investors. I'm not actually aware of iWeb's FX fee. I expect there is one, but I would imagine it's more than 0.15%. So trading 212 wins on that. Yeah, they've introduced it, and it's annoying, but yeah, I think they're just doing it, as they're growing. So they want to sort of be not necessarily free, but they want to be the cheapest. So as I say, if you're new and they're your first company, then it's annoying to have sort of had it this good, and then they start introducing fees. But yeah, certainly if you're coming from other platforms, then they sort of look like a gift from the gods, really. I would say certainly the number of people that are going to leave sort of because of these new fees would be certainly offsetted by people that are going to leave other platforms to go to 212. So I wouldn't imagine it going away anytime soon, but I think it's maybe a bit overblown, the sort of talk that they're just going to start hiking and introducing new fees for everything, hiking the FX fee up to 0.5%, 1% or whatever. It's just people wanting to sort of attention grab, really. I think they're going to want to be the cheapest for some time, certainly, because they still want you to get into CFDs. Basically, I'm sure they would prefer everyone to maybe have a little dabble in CFDs, but if you're happy to just use the ISA, they say the ISA is profitable, so yep, got no reason to move. So yeah, still watching the gold price at the moment. Obviously a bit rough over the last few months. This is in US dollars, looks even worse in pounds because the pound's been strengthening against the dollar. So you're losing on the gold price and the strengthening pound. But wondering whether it's sort of maybe bottomed around this low area. Always normally look at it in dollars, really, but the sort of low 1700s, high 1600s. But time will tell. So obviously the gold miners are taking a bit of a pounding. I think with the little, rise up to the sort of low 1700s, my gold ETFs in the Hargreaves Lansdowne ISA and that have done reasonably well, started to sort of go back up, but I think it's going to be a long road. Obviously, you've got to be fairly patient with gold compared to things like crypto. It's a long move where we're sort of talking about a high in crypto, Bitcoin, potentially by the end of the year. I think if there is a sort of bull run for gold with inflation and devaluing of the currencies and that sort of thing, the gold bull run could take 3 years, 5 years potentially to sort of run up and top. It's a big market to move. I think gold sort of 12, even at today's prices, about 11, $12 trillion, where Bitcoin is 1 trillion. So it's a lot easier to move gold than it is crypto. But yes, obviously there is still a lot of gold out there that isn't actually traded, so there's not a daily trade of $12 trillion worth of gold moving about. There's plenty in jewellery and that sort of thing that'll never be moved, and plenty just stored away that would never be traded unless it goes to a crazy price. And then on the crypto side, you've got similar, basically the sort of original Satoshi wallet has I think supposedly still got 1 million Bitcoin in, and I think maybe 3 or 4 million has probably been lost. The sort of the chap with the hard drive in the landfill site is never going to find it, and the forgotten passwords and that sort of thing. So there's potentially 4 million Bitcoin of that goes into the 1 trillion market cap, but certainly isn't traded. So there isn't sort of actually a trillion in Bitcoin getting sloshed around. So it's quite easy to move the market. But we stay patient on gold, and it's a nice hedge against inflation. Enigmatic, you're a bit of a fan of 212, still the best value? Yeah, I think, as I say, they kind of know they've got you. They've gone from being free to being the cheapest. So if you want to move and pay more, then it's up to you, but there's little point in that. As long as they're the cheapest, then I'm kind of happy. Like I say, I spent a year with Hargreaves Lansdown, and trading 212 don't look too shabby. What fundamental metrics do you pay the most attention when looking at stocks? Probably, like I say, the first metric I would really look at is forward PE, really. A lot of people mention the sort of price to earnings ratio, but they'll generally look at the one you sort of see on the front here. So this is the trailing 12 months PE. Obviously at the moment, a lot of companies that you're going to be looking at, this is going to be all of 2020 pretty much, certainly in March. Now you're not even taking sort of profitable January and February into account. This is an entire year of COVID, basically. So I don't think it's really the best indication to look at trailing 12 months. So really want to be looking at the forward PE. So obviously now we're in March, the current year of 2021, if they're January to December, isn't strictly the forward 12 months PE, but it's sort of as good as you're going to get for most places, unless you could add up the quarters maybe and do your own forward PE. But I think taking the full year of 2021 is sort of a fair metric, and if you want to sort of see their growth, then you can compare the sort of 2021 PE to the 2022 PE. So as you say, sort of it's a little bit ridiculous looking at Tesla. I mean, we pick a more reasonable company, so Anthem, that I was just looking into and bought a little bit of. They're so take $343, say, by 24.81, which is the sort of consensus estimate for 2021. So it gives you a PE, forward PE for this year of 13.82, not too bad, in the sort of the value range, sort of under 15 is quite nice. And then if you look at sort of next year as a growing company, then you're looking at 28.15. So a 1 year forward PE of 12.18. So it's quite good. Obviously if these were, very similar numbers, then they're not really growing a great deal and you'll get very similar PE. So that would sort of give you an indication that they're not growing a great deal. Yahoo obviously give you some other estimates and that sort of thing. They'll give you their sort of predicted next 5 years growth. I don't put a great deal of stock into this. This is sort of gives you some very strange figures for some companies, but just an indication. But yeah, that would be the sort of first thing I would look at as to whether I want to look into them further. So obviously you look at Tesla and you see 150, say, and I think, well, unless there's something going on that I'm not aware of, then I would stay away. Lawrence, trading 212 closed to new customers. Yes, unfortunately, still the waiting list. Do you have any idea when they'll open their doors again? No, unfortunately. They're just saying get on the waiting list, and they're getting through people. I haven't sort of heard any particular news about how fast they're getting through people. So kind of just got to wait. If you really want to obviously make use of this year's tax year, you could open up an ISA, say, with someone else. And also, maybe join the waiting list for 212 and maybe open up next year's ISA with 212. Sort of run the both together. It's a little bit more complicated. Obviously, some people would want to have it with just one. If you're happy to keep it in cash, you could sort of open one up with someone else, deposit just cash in there, and then when trading 212, you can open up a trading 212 ISA in the new tax year, and then you could transfer the cash from the old one into trading 212, because you can only transfer cash into trading 212, and then so if you've got a lot to invest, you could get this year's and next year's tax year allowance into trading 212. It's a possibility, but yeah. Winkmatic, rumour is 6 weeks. Yeah, I mean, I haven't heard any concrete information. They're just sort of saying we're working on it. But depends on your situation, really. I mean, Lawrence, if you want to sort of let us know how much you're looking to invest or what you're sort of planning, could maybe be an indication. Obviously, if you're say investing $5,000 a year, say, then if you're not going to max it, then you could always just wait. Maybe if it is going to be another 2 or 3 weeks, shouldn't make a huge amount of difference. Potentially some stocks might even come down by then, so you might be best off waiting. But yeah, you could do that. But if you're investing over 20,000, say, you may want to sort of stick one in somewhere before April, and then do trading 212 after April. But yeah. So yeah, I do like the look of this process, to be honest. It kind of seems a bit crazy, but yeah, they own sort of stakes in all of these lot, and they've also got a sort of undervalued stake in Tencent. So I guess I think, as I say, Tencent. So they were 794 billion. So take 31% of that. So you're looking at 246 billion just for the Tencent holding, and then so look at process. I think it's that one. Yeah, $180 billion. So you're looking at sort of shortfall of $70 billion nearly, discount on sort of just the Tencent holding, and then obviously you've got Udemy and Auto Trader and the sort of fast food stuff and anything else that they might buy. So a lot of these are smaller companies, and the thing to remember is with Tencent, they didn't buy $100 billion of Tencent and let it grow to 200 billion. I think they bought Tencent at something crazy, like the whole stake they paid $50 million for or something. I'd have to check the figure again, but it was a tiny, tiny amount, sort of back in the early 2000s, and it was seen as a speculative investment, and 20 years later nearly it's worth 250 billion. So any one of these potentially, they're not going to be 10 cent, I wouldn't have thought, but they could grow to easily 10 times, 100 times maybe, and then they won't just be seen as 10 cent plus a load of other rubbish, I think, is how people are valuing them, basically. I mean, as I say, you sort of take 10 cent and then they're basically valuing all of the rest at nothing. This is kind of a common thing with sort of conglomerates, as they call them, sort of companies that own a huge amount of diversified companies. You sort of see it with Sony, as I've just bought into. They're sort of obviously in games consoles, but also electronics and the sort of Sony music label and films. You sort of got Spider-Man and that sort of thing they own licenses for, so they own loads of different things. And if you there's been lots of rough tallies up of everything they own, and it's sort of considerably more than their market cap. So people just don't seem to like conglomerates, basically. Probably the biggest one in the world is Berkshire Hathaway. So they don't seem to suffer from this quite as much. So they're 580 billion. They've sort of got a huge portfolio. Probably about half of that value is public stocks. A large portion of that is Apple. It's their largest holding. But again, if you sort of take all of their stocks and all of the cash that they've got on their balance sheet and all of the companies that they own outright, sort of total the whole lot up, seems to come to more than 580 billion, but maybe not quite as much more as some of these foreign conglomerates get hit with. So Berkshire's maybe a little bit discounted, but not quite as much as everyone else. See if we've got any more questions. Did I keep my shares in the Bitcoin ETF from my video 4 months ago? So I bought, of the BTCE, I bought 142 shares, I think it was. And I think when the news came out that they were going to be going into close-only mode, it sort of didn't spook me, because it was just a UK FCA rating. They were deciding it's a derivative, so they were going into close-only mode. But I did a little bit of reading on it at the time, and they said, it was still going to be, obviously it's on the German exchange, so everyone else trades it around Europe. So they said there should be no problem in liquidity sort of selling it. So it's still in. I can't obviously buy anymore, but I sold half the stake just in case there was liquidity issues. So I've got 71 shares. And I still sort of hold that to this day. Just have a quick sort of check on where we are now. So Argo blockchain is 174% up, doing really well. But the Bitcoin ETP is 247% up. So nice move. I think obviously again, people, obviously other countries don't have ISAs and that sort of thing, but people want to buy Bitcoin in an easy manner on platforms that they already use. So things like this Bitcoin ETP, and I think there's a couple on the Canadian Toronto Stock Exchange now, and everyone's awaiting the US one. So I think people like sort of holding them in traditional stockbroking accounts and that sort of thing, and it's just seen as easier than getting a wallet and holding it yourself and worrying about private keys and that sort of thing. So certainly the Bitcoin ETP has been not taking the crash that you might have expected when Bitcoin drops. I think people just don't want to sell out of it quite so much. So yeah, I still hold half the stake, similar to Argo blockchain. Really, this will probably be one of the last things that I sell. Probably around, hopefully, if Bitcoin gets to $100,000, then I would probably sell out of a large portion of Argo blockchain and the Bitcoin ETP. Maybe leave a little bit just as some exposure within the ISA, but I want that money to be sort of going elsewhere, really, into my long-term holds. Don't want to be hugely exposed to crypto past $100,000, really. Sam. Hello, Sam. Those who can no longer buy Bitcoin ETF, yeah, you can invest in Bitcoin miners. As I say, yeah, Argo blockchain, absolutely. May well pursue dual listing. Yeah, I mean, I know some other sort of channels have been sort of putting a lot of stock into them potentially listing on the Nasdaq. I expect it would help, but not sure it will rocket the price as everyone is thinking. I know they're more efficient than your sort of Riot blockchain and Marathon, but I still think Riot actually do more in revenue. Would have to double check, but yeah, I don't think just being more efficient is going to push them to, similar levels to Riot blockchain. But yeah, it should sort of see a pump to it. So, I mean, if you wanted to diversify, you could just split money between Riot, Marathon, and Argo, for example. Might be the way to go, and you would probably track the Bitcoin price fairly well with that. Probably outperform it if it goes up, as sort of most miners would. Like I say, it's very similar to gold and silver miners. They'll generally go up by, maybe 50% more than gold or silver would. Sometimes 100% if it's a big move. So it's interesting. Have a look at what Riot blockchain have been doing with the recent sell-off. So 5 days. So yeah, it was $64. Obviously, you've had the pump over the weekend, and then it sort of opened and dropped. So even at the open on Monday, it didn't drop below the previous Friday high. I think you saw this. Obviously, it was early Monday. It was higher than it closed on Friday, so you didn't really see this drop. It was similar with Argo, and then sort of as it started to drop a bit further, it's come down a bit more. But yeah, not too much. Would have expected a sort of a bigger drop off, really. Considering you've had a sort of 10% drop, I think, in Bitcoin on the 1 day. Yeah, you're sort of 44,000, sort of come down to 40,000. So yeah, 10% drop in Bitcoin. I probably would have expected to see a little bit more than what's this, sort of 13-14%. So yeah, the US ones seem to be performing quite well, really. Argo, as I say, seems to be sort of detaching a little bit from the Bitcoin price, so they've not really seen too much going on at all. I mean, they're up from the Friday close. I expect this is probably, as I say, enthusiasm for the new Texas project, and yeah, just potentially the Nasdaq listing and sort of growing their existing units. I think Riot and Marathon are sort of a little bit more established. They're not expanding tremendously from what I've seen. They are expanding, but yeah, a little bit more mature. So you maybe don't see that that incredible growth. Cameron, can I search Get G Technologies and tell me what you think? Haven't heard of it, but we'll have a look. Is there, what's the ticker? You've got G Tech Group. Can't see them on Yahoo Finance. Is it G Tech Group? On the London Stock Exchange? Not a lot of detail on them. Geoscience and geospatial products and services. So, oil and gas equipment and services, if this is the one you mean. Oh, GS Technologies, sorry. GSI Technologies? GS Technologies. So, what are we looking at here? Oh, it's a penny stock. You may sort of heard my my opinion on penny stocks before. I'm not all that keen. They've obviously got a very high rate of failure. Provides integrated information communications. Oh, so they're somewhat worldwide, quite a lot of Asia. Supply, design, engineering and maintenance of structured cabling systems. Yeah, I mean, obviously not knowing a huge amount about them, it's difficult to sort of give a huge amount of overview. A lot of these sort of tech startups, you're not going to know a huge amount about them. There's not going to be a lot of financials on them. It looks like they've been going a little while, but obviously very little in revenue. What's this, 4 million in revenue for 26 million, what was it, 26 million market cap? Not too bad, I guess. But yeah, loss making. I suppose it's not expected to be turning a profit. It's just really, it's not my area, these sort of startup penny stocks and that sort of thing. I'm not really keen on growth stocks, to be honest, even in the mature kind. So I just instantly cringe, wince whenever I see loss making, really. You're sort of projecting when they'll come out of, with the more mature ones, you're projecting on when they'll start turning a profit. With the sort of penny stocks, I guess you're maybe wondering whether they'll get acquired or whether they're going to grow into a bigger company and, growing revenue but losing money maybe for the next few years and become a larger company. It's just not really my cup of tea, to be honest. Obviously, it's the way you can grow a small portfolio very quickly. It's just very speculative. These companies could go bust. But yeah, obviously do some more research if you want to look into them. It's just how much you're actually going to be able to find of reliable data. But yeah, so I guess, so they've been going since 2018, I guess. Very low market cap until just recently. So 20 cents, or 20 pence rather. And so that was this year, just a couple of months ago. Obviously a run up 10 times. Sort of sitting at about 10 times. So I don't know what there's obviously some specific news around that. Obviously, I guess around here they would have been a couple of million market cap. Maybe sort of diluting shares and that sort of thing. It's just a bit of a roller coaster holding companies of this size. Not really for me. They registered a new fintech subsidiary in the UK. Yeah, interesting. You got in at, what is that, 0.6 of a penny. Interesting then. So, crikey, that must have been a fair old while ago. So I can't see that they've actually been, was it sort of on a spike low maybe, or a sort of private investment? Can't see that they've actually been under 10p. Interesting though. Thoughts on LISN just round the corner? I don't know of LISN, I have to admit. I presume it's not that. What is LISN? Tell me if it's that. Oh, is it Lindt? Is it Lindt chocolate? I know they've got a very high share price. LISN. Drop a comment if you mean, is that Lindt chocolate on the Swiss exchange? Yeah, Lindt chocolate. It's even an interesting one. You can't get a lot of analysis on Yahoo for that sort of thing. You can look at Market Screener. It's not the best analysis, but you can look them up on Market Screener and they give you a brief sort of overview. You can look up financials, so it will give you some estimates in Swiss francs. So 85,000, 86,000 Swiss francs. So yeah, they've got some debt, not too bad. Fairly nice book value, sort of quarter of their share price. Not too bad. Dividend, fairly small dividend, but yeah, so 1,800 Swiss franc share price, so 86,000 Swiss francs into 1,800, so 45 as a very approximate forward PE. Not sure how good these analyst estimates are on Market Screener, but it seems to be one of the only places you can get, you know, some estimates for it at least. But yeah, I think I have looked at these before, and they do sort of tend to trade at very high PE ratios. A lot of the stuff on the Swiss exchange actually seems to. But yeah, 45, potentially a little bit high. So looking like they make about 12% net profit. I suppose that's reasonably good. Yeah, it's not really one I would sort of want to look at in the current environment. I'm kind of looking for a bit more value at the moment. I think things with this sort of high PE can be taking a knock. I mean, you've been seeing it the last few weeks with the tech stocks sort of coming down just at the very hint of a rate rise. But yeah, I mean, that was a tiny hint of a rate rise, and you know, you've seen Tesla lose 30% or so. I mean, if they actually came out and suddenly said, oh, rates are going to go, you know, US rates are going to go up 0.5%, seems like the whole world would end. So yeah, I kind of want to be in pretty defensive value stocks at the moment. Sadiq just joined. Can you give me some clarity on the Argo blockchain performance? Been very strange. Yeah, so sort of did cover this a little bit earlier, but so I kind of think Argo has been sort of detached a little from the Bitcoin price with the Texas land project and issuing new shares and that sort of thing. It sort of plays about with the share price a little. If you look on the sort of longer term, last sort of few months, it tends to track the Bitcoin price sort of on leverage, if you like. But yeah, I think it should sort of return to tracking that. We did sort of discuss there's no sort of science to it, but just sort of predicting if Bitcoin goes to, say, $100,000 Bitcoin. I sort of took a rough idea that Argo would overshoot that and maybe get to about £5, £6. Obviously, it's speculative. There's nothing to say it has to go anywhere near that, but that would be my sort of point to start thinking about taking a serious amount of profit. Oh, Josh, do you have any plans to swing trade? Not all that keen on swing trading. Depends on how much time period. I mean, if any of my sort of holdings do rocket up, I would probably say rebalance rather than swing trade. I'm probably, very unlikely to sort of sell the whole lot. So, if I say in this lot, if one of them sort of rockets up, whether that be, maybe one of the sort of more technology plays, might get Nintendo really, really rocket if they introduce the Nintendo Switch Pro. I would sort of probably once I'm all in stocks and out of crypto and that sort of thing, I'm not really selling any of these at the moment while I'm sort of building up all the positions. But yeah, maybe once I'm more into stocks, if something rockets up, say, I would rebalance into the other stocks and sort of spread it around. And if something drops, maybe take a little bit of profit on some that are up and sort of put it back into the low ones, really. So probably say rebalance rather than swing trade. I wouldn't just hold everything indefinitely and just live off the dividends. So I'd be an active rebalancer. Sam, eToro is going public through a SPAC. Yeah, so Inkmatic sort of mentioned it. Fintech Acquisition Corp Stock V. Very, these SPAC names roll off the tongue, don't they? Yeah, not really keen on that. Don't really like the look of eToro as a platform, so can't really see that there's all that much to be gained from merging with eToro, really. I don't see how much more they can go. I think they're fairly worldwide already. Yeah, not all that keen. Went up by over 40% today. Fair enough, I guess. There's certainly money to be made in SPACs. I'm not really all that keen. I did hold the CIIG, the Arrival one, for a little bit. Sort of went up by 50% or so, and I got a bit lightheaded and sold out, basically. So I'm not really a SPAC guy. Josh, what do you think of Admiral? Never really looked, to be honest. Quick look on, see if we can look on Market Screener. I would imagine they're sort of not particularly expensive, sort of insurance company. Can't remember, do I see they own confused.com, is it? Or Go Compare, one of the search engines, or one of the sort of comparison sites. So that's £30 a share. So £30 a share. Earnings per share of say 196. Yeah, so they're about, what, 15. So forward PE of, yeah, about 15. Not one that I would jump to hold, sort of a little bit old world. I've got Aviva and Legal and General sort of in the insurance type game, much lower sort of valuation, nice dividend yield. Can't see that Admiral is sort of growing particularly faster than them. Dividend seems, well, actually pretty good. Although, yeah, earnings per share of 196 and sort of predicted dividend, I don't know whether maybe that's a special dividend, but yeah, payout ratio looks pretty high to me. Not all that keen on that, to be honest. I think I would stick with Aviva and Legal in General, a little bit more defensive. Simon, thoughts about Barbar? Actually, yes, I have bought. I didn't mention one of the stocks that I bought with the crypto money this week was another 1,000 into Alibaba. Sort of seem a fair price. It's come right down. The analysts aren't sort of projecting any particular reduction in earnings over the next couple of years. Sort of still potential about the what's the name, the financial company sort of being spun out maybe from regulators. It might lose a bit, but if it has to be spun out, then they may sort of be able to sell it and get some money out of that. So I can't see it being a huge negative. And yeah, they seem to have a dominant sort of position in cloud computing and that sort of thing. So quite like Tencent and Alibaba at the moment. Looking at Baidu as well, but seems a little bit sort of up and down, maybe a little expensive. Yeah, certainly like the Chinese sort of tech companies. Seem a reasonable valuation. Certainly Alibaba has come down to sort of right where I would consider normal American. I mean, I think it is the PE ratio pretty much of the S&P 500 now. So as a tech company, pretty good. Apple, I would not really go for at these prices. Seems a little bit overpriced for what it is. It was sort of starting to come down maybe a little, and then started talking about cars in 3 or 4 years, and it's just pushed it back up to reasonably high levels. Come down a little bit recently, but yeah, what we're looking at the moment, I think it's leveled out about, yeah, sort of 125, 122 level. I mean, you look at sort of earnings, they're not growing a huge amount. They haven't really sort of grown for, well, they're giving them 15% growth, but not really sure I can see that. They're certainly not showing it over the last sort of few years. So you're looking at, 125 over 445, so PE of 28 for the next year. Seems it's come down a little, I guess, but not a huge amount. 125 over 468 for next year, still 26. And I do like to, I have sort of pointed out to some people, you sort of look at Apple's revenue, say, it's not growing a huge amount over the last sort of few years, really. The revenue is growing a little, but certainly if you look at net income, it's even worse. So sort of looking at, it's come up in the last quarter. They always sort of have a pump around Christmas and they have a good quarter, but sort of trailing 12 months, you're looking at the sort of high 50 billions in net income. And you sort of go all the way back to 2015, they were doing 53 billion. So basically grown around about 10% in 5 years in net profit. and obviously the stock's done 400%, whatever it is. I haven't sort of checked recently, so yeah, not very keen on Apple. Josh, what excites you about Aviva? I'm not particularly excited about Aviva. It's really just sort of a defensive insurance stock. Yeah, so it's sort of low, very, very low PE. I think even lower than Legal and General. Aviva don't pay quite as high a dividend, but just sort of see it as fairly stable company. Wouldn't drop too much in a sell-off. If we start getting inflation and interest rate rises and that sort of thing, don't really think Aviva's got too far to fall. I think it would sort of level out maybe 10% down if everything's sort of going down 20 or 30. So it's just a little bit of defence really. Similar with Legal and General. I think, even if they're dropping a little, you still get sort of 5 or 6%, maybe 7% dividend. Can't remember what they're at the moment. So sort of see that as a break even if the market's tanking a little bit. So certainly not excited about them, but yeah, that would be my sort of defence side on financials. Oh, and the long-term ETFs. So yeah, that is still pretty much these. So I don't actually hold all of these yet. I've got the US small cap value, but I don't hold the S&P 500 or the mid cap just yet. Sort of seeing them as a little bit overpriced. Been buying into pretty much all of the rest. Yeah, I think I've got both the Europe ones. Haven't added anything recently into the emerging markets or the Japan. But I have been into the clean energy and the video games. Put £1,000 into both of these in the last week with the crypto sales. The water one, not too long ago. I think last month put some more into that. Again, fairly sort of just defensive, small dividend, but should be sort of relatively safe. The GDX and GDXJ, I'm sort of not investing in just yet. I'm just keeping the ones I've got in my other ISAs, but eventually when I sort of get rid of all that, I'll just have 2.5% in each of these. But yeah, obviously I've just got substitutes for these basically, or sort of alternatives. But yeah, this is the sort of longer term portfolio. So yeah, when I don't hold any of the world small cap yet. Maybe should have. Seemed reasonable value, I guess, but yeah, just not bought into that one yet. No real reason. Sadiq, what's the time span for BTC to reach 100k? I'm thinking, well, I think it could be the end of the year. I mean, that's maybe a bit cautious. Could be, yeah, could be sort of sooner than the end of the year. I think some people are thinking sort of September time. But yeah, I think probably within the next year. Seems a bit, well, it seemed crazy, 6 months ago, a year ago. I mean, a year ago today we were at, what was it, $4,000 or something. I mean, 100 seemed just people's pie in the sky, crazy bullish targets. But when you're at 55, then 100 sort of doesn't seem crazy. You're almost bearish saying it's going to be 100. But yeah, I would hope for sort of in a really bullish scenario, potentially the summertime, sort of July time, sort of realistic maybe September, and sort of cautious probably Christmas time. Josh, SLP, yeah, Sylvania Platinum. It's not in the long-term stocks. I mean, I may sort of, I don't know, I may not sell out of it completely. I could sort of keep a could sort of keep a small allocation in there. I mean, it is only a small cap, and a lot of the platinum, palladium, and rhodium side, huge amount of the use is in combustion engine vehicles. There isn't a great deal of it goes into electric vehicles. They sort of use silver and a lot of the sort of base metals and lithium and that sort of thing. So over time, I think platinum and palladium and certainly rhodium is going to get phased out in that side of things. There's jewellery demand and that sort of thing, and some other uses for platinum and palladium, but it's going to see a big portion of its use sort of eroded away. So yeah, that's part of the reason I may actually just sell out of it completely. It's not don't really see it as a long-term use basically for the metals that they're producing, where sort of the silver miners, there's always, there's 101 different uses for silver in the past 50 years or so, and it's bullish sort of longer term. It's used in solar power and electric vehicles and that sort of thing, as you say, and gold would be the hedge. So that was the reason for sort of keeping 5%, say, in these two, where sort of Sylvania is more of a sort of shorter term play, while the sort of rhodium, I think, is being used to increase efficiency in catalytic converters and that sort of thing before the whole world switches to EVs. So I think Sylvania will do well, but yeah, it's not a 10-year play, because I think the metals will get used less and less. Do I have any book recommendations or websites for strategies and news? I tend to sort of get a lot of the news from things like Discord and that sort of thing, and YouTube. I haven't been sort of reading a huge amount recently. Yeah, sort of probably should more. I think maybe if I can sort of get to a semi-retirement point, then I'll probably start delving into more the sort of recommended financial books and that sort of thing. I do want to start delving into them a little bit more. I got the audio book of Peter Lynch, the one up on Wall Street. May sort of use audio books a little bit more than traditional books, sort of in the car and that sort of thing. Maybe a little bit easier. But yeah, I'm not really haven't really got any particular recommendations. I know you're in the Briscord forum, aren't you? Probably best to have a look in the book club section there. I think I've seen quite a few good recommendations in there. Price target to sell out of SLP. Still sort of going over this in my head, so I've sold a quarter of it at sort of current prices, really, about sort of £1.23. Really just got sort of arbitrary targets in my head at the moment, maybe sort of a little bit more at, say, £1.50. Maybe drop it down to sort of half the original position at £1.50 and maybe sort of £2. Kind of waiting for results to come out. See what sort of profit they're making off the recent sort of high rhodium prices and that sort of thing. If we get an EPS update, then see where we go from there. But yeah, I do sort of sooner rather than later want to be kind of taking profit on that and putting it into things that I only want to hold in the ISA, so REITs and maybe any speculative stuff, the ARC pie and that sort of thing. So yeah, probably £1.50, £2 probably. Okay, so if there's any more questions, I'll we'll probably leave it there. So that's kind of where we are on ETFs and stocks. Kind of updated you on what we bought this week, because it kind of did wasn't really going to happen until the weekend when we sort of had this rocket up. Wasn't planning on buying much particularly this week, but it's all happened. So made a lot of new buys, and obviously going for some new stocks that aren't on this list. So just wanted to kind of explain why. Haven't drastically changed my long-term strategy. It's just some of these not really at prices that I would want to buy them at. If they come back into range, then maybe sell out of some of these alternative ones that I'm buying and go back into some of these. So yeah, gold seems to have bottomed out. Yeah, I think round about this sort of seems a reasonable amount. You're getting new stimulus packages and that sort of thing. I think inflation's starting to pick up. You'll start to see gold and that sort of thing come back into reasonable levels, but it'll take time. It's not going to break the $2,000 highs sort of in the next week. It'll take months, I would have thought. And Tom, would you recommend Coinbase and Binance over the other options? Well, I think if you can get on Binance, I think they've got the cheapest fees out of most of them. I like Coinbase because they seem sort of bank friendly. You know, the fees are reasonable. They're a lot cheaper than a lot of other places that you would use. I'm talking Coinbase Pro, not the ordinary Coinbase. Ordinary Coinbase seems horrendous, but yeah, Coinbase Pro seems fairly reasonable, and yeah, Binance sort of maybe a little bit less user friendly, but yeah, I think they've certainly got the cheapest fees and probably the biggest selection of altcoins. So yeah, I would probably recommend them over most of the others. I see some YouTubers recommending Swissborg, sort of saying, you know, that it's better than a lot of the traditional platforms. I mean, called Coinbase traditional, that seems a bit ridiculous, but yeah, sort of recommending them. Could maybe have a look at Swissborg, but kind of a bit wary of them as a new platform. Don't know whether they're 100% bank friendly, or whether people would, you know, whether some of the banks would reject them as being a new crypto startup. But yeah, maybe have a look at them. Alright, I shall see you guys later.